Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services. As I speak to all of you all this Monday morning, markets have recovered from the opening lows. Before I go any further, let me give you certain levels on Sensex, Spot Nifty, Nifty Bank, Rupee Dollar and Crude Oil. Sensex is at about 79,720, down about 80 odd points. Nifty is absolutely flat, 24,135 with gains of about 2 odd points. Bank Nifty is at about 51,910 and there is a downtick of about 145 points. On the rupee dollar equation, weakness on the rupee against the dollar, 84.61 is the level on rupee dollar with weakness of about 0.12 paise. And on the Brent and NYMEX, $72.18 to a barrel is Brent. $68.32 per barrel is NYMEX. There's been a marginal uptick on crude oil prices this morning. Expect to be absolutely range bound and primarily driven by what happens in the Middle East and of course what policies and inventory position from the US. On the rupee dollar equation, well, expected to trade in the current range with a 5 to 10 paise range on weakness as well as strength. And more importantly, I think the rupee dollar reaction will be a little bit more clear once we have the credit policy, which is lined up for 6th of December. We have more clarity over there. Now coming to the markets. So after opening lower with almost about 100 points downtick on the Nifty, 300 plus downtick on the Sensex, markets are able to recover the lost ground and expect this kind of recovery to possibly bring up the sentiments and bring in a little bit of more stability. Range, if you ask us friends, for the Nifty spot, on the lower side 24,000 and 23,900. This is the lower side support zone where we might see some kind of buying coming in. And that's visible over the last 2-3 days that we've seen. We've gone lower, but markets have recovered from these lower levels. And on the higher side, the resistance stands at where we had mentioned last week, 24,300, 350 to 24,500. If we are able to take off 24,500, then the higher side opens up and the levels that we could possibly witness is 24,700 to 24,800. But I think we'll need a lot of patience and we'll need the volatility to kind of ease off a little bit in case if, and volatility in the sense India VIX, though it is above 14 right now, but it would be very much prudent to see levels of 12 and 13 on India VIX for the volatility to settle down. As far as the FI activity is concerned, friends, for the month of November, 21,600 crores is the sell side figure, provisional, which the FIs have sold after a record sell side number in the month of October, and expect this little bit of selling activity to continue, though the quantum of those sell side figures we expect gradually to possibly get a little bit lower, and till 15th of December, post that we'll see Christmas holidays and New Year holidays, and there will be some amount of break that the FIs will be taking. But till that time, I think we should expect a little bit of more, but a subdued number on the lower side in terms of sell side number from FIs. Domestic institutions continue to support the markets primarily, and that's one of the reasons why we've seen some stability come back in the markets. On the GDP number, well friends, it was a 7-quarter low for the GDP number, the figure that we got on Friday evening. And the market reacted to it also this morning, and then we've seen some recovery. I think the impact of GDP number on the lower side and an elevated level on the inflation could have some amount of impact in the decisions that will be made between 4th and 6th of December when the MPC meet will be held. And eventually on 6th of December, we'll have the Honorable RBI Governor, Mr. Das, telling us what the outcome of the meet is and what is the status of the economy, GDP, inflation, along with that, of course, other data points and factors that influence the Indian economy. So it will be prudent to watch out for that. In terms of rate cut, well, to expect a rate cut in this kind of a situation is a little bit more optimistic. I think it will be a pause with a commentary with respect to a growth in the GDP numbers and of course stability on the downside as far as inflation is concerned. Given the output, agri output, I think inflation should possibly start heading lower, but that we'll see as the numbers unfold. Month-on-month sales numbers for the auto pack have already started to come in. They have been a little bit better, but the problem is we are in the last month of the calendar year, December 24. And as always, December is the month where most of the automobile manufacturing companies offer discounts to go lower on the inventory lineup that is there. They need to clear up the inventory because then 1st Jan there will be a new year tag that will come in with the manufacturing label that is there on the vehicle. So that's the mentality that people follow. So expect the impact as far as discounts are concerned to reflect in the third quarter. It remains to be seen what amount or what is the quantum of discounts that is offered and how will it have its impact on the bottom line. Given the broad nature of the market that we've seen in the last month and a half or two, we believe that the large part, given the current events which are in the backdrop, possibly the market will try to find its base and do a base building exercise, which is rather prudent, opening up higher and then losing all grounds or opening up lower and then recovering, and that kind of volatility will lead to a lot of confusion and chaos in the market. So our sense is that as India VIX settle down between 13 and 12, we will have this volatility also reducing. And once the volatility reduces, we'll have some kind of comfort zone in terms of base building. Base building will be in the zone of 24,000 and 24,300, 350 because that's the initial resistance level on the higher side. And we've seen the markets try to surpass that level of 24,300, 24,350. But last entire week, we were not able to do that. Hope this week the events are positive on the local and global front, which will help the India VIX to reduce. And India VIX is also likely to reduce because the sell side number from the FI is also gradually going to go down. So once that happens, we will see some amount of stability come in, and base building exercise is what we expect between 24,000 and 24,300, 350. And once that is in place, I think we'll have the strength to take off that resistance level of 24,350 and then go towards 24,500. And if we are able to take that off, then 24,700 to 24,800. So that's going to be the big backdrop. That's going to be the levels to watch out for. And just in case if the stability in terms of policies come through, then I think we'll have much more opportunity to be optimistic. But till such time, I think we need to be a little bit careful, cautious from immediate short to medium term point of view, traders. But for investors, I think there will be plenty of opportunity to investment building exercise. Last week was the FNO expiry for the month, and the rollovers for the month of December has been quite strong, indicating that we can expect the December month, which is the last month of the calendar year 2024, and possibly wind up the year on a positive note with some kind of upside. Sectorially, we believe there will be a lot of sectors that will be in the spotlight. Electronics manufacturing sector, capital goods engineering, banking, FMCG to a certain extent, IT, pharma, FMCG, cement. These would be the sectors to possibly expect some amount of contribution towards market stability. And of course, in terms of investment idea, friends, we always give you two investment ideas. This time we have chosen two different sectors. One is from the metals related pack, company called NMDC Limited. I think at around 200, 230 it is trying to find its base, and if the momentum is positive and if the news flows from China are a little bit more constructive in terms of positive side, then I think the entire metal pack is likely to show its performance. And we've heard a lot of policy decisions from China. Government's ability to support the metal sector is also likely to have its positive impact. So NMDC is the first investment idea from the metals related pack. Mind you friends, these are fundamental recommendations, so you need to have 12, 18, 16, 24 months plus kind of time horizon. And then gradually build up, start at current levels, don't put all your money at one time, and then start nibbling in the stock in case if you get lower levels. The second one is from consumer durable white good appliances. Symphony Limited is the company. Well, historically, winter season is not a very strong earning season for a company like Symphony because they are historically pioneers in manufacturing of coolers. But I think once the winter is dusted and the summer starts approaching, I think the market should look much stronger for a company like Symphony. And more importantly, friends, Symphony Limited has also ventured into a lot of other products, which has actually added to the top line and bottom line. And with the kind of historical dominance that Symphony has in semi-urban and rural India, I think a preemptive investment building exercise can be initiated current levels from a long-term point of view. Again, this is a fundamental investment idea, not for 3 months, 6 months, but 12 months, 16, 18, 24 months plus kind of time horizon. And we expect this particular company to do well over a longer period of time. The aspirations are improving as far as semi-urban rural Indian population is concerned, and I think that will be the growth driver for companies like Symphony Limited, who are into white good appliances and consumer durable kind of category. Needless to say, these are long-term investment idea which I've already mentioned, so please have enough time horizon by your side. Current levels, start nibbling in, don't put all your money at one time, and gradually add on to the stock as we go forward from here on. And for the market, friends, let's hope that India VIX settles down towards 13 and 12 and stability comes into the market so that we have a strong base building exercise. And once that base is in place, I think we are possibly preparing ourselves to the next up move. And the levels to watch out are on the higher side, 24,300, 24,350, 24,500, and if you are able to take 24,500 off, then I think 24,700 to 24,800 is the level to watch out for. Thank you very much for your patience hearing, and I'll see you again next week. Till then, please do take care of yourself. Bye-bye.